we are now looking at the new microfinance banks. This year alone, or last year, so 2024, microfinance banks invested heavily into online banking because they were digitalized. First Central Bank has even digitalized the process of their registrations. They are coming in. So you are now spending money. We saw microfinance banks partner with Microsoft, Oracle. This is a lot of money. We saw them also partner with Paystack. That's a lot of money. So there's a lot of investment that has gone into microfinance banks. Good thing now, they are more steady. Your money, you are rest assured that you can put your money in many microfinance banks and go to bed.
This is Souq business landscape. Now let's get straight to capital asset efficiency. This has to do with our microfinance bank. But non-financial asset, that's what we're talking about, is hitting some good record highs. Non-financial assets held by Nigeria's microfinance banks rose to a record 358.787 billion naira in June 2025. That's the highest level since 2018. According to Central Bank of Nigeria latest quarterly statistical bulletin, the figure marks a sustained upward trend and reflects a notable shift in how operators structure their balance sheet amid changing economic conditions. Now, this data is suggesting increase in investment in physical and intangible assets. This includes branch expansion, office infrastructure, digital platform, and core banking software. Analysts are also saying that this addition points to efforts by microfinance bank to scale operation, strengthen internal system, and improve service delivery in a more competitive financial landscape. Now, however, this is where it gets a bit dicey. The growing assets pile is also prompting questions around capital efficiency. Non-financial assets do not directly support lending, which is the major reasons why they are created in the first place. Now, it's raising concerns about reduced capacity to extend credit to micro, and small businesses. How banks balance this expansion with core intermediation may now shape the sector's resilience, and that is what we want to talk about. Just for a few minutes, then we'll move to the next story. We have come to an era where microfinance banks used to be one beautiful building close to the market or close to one industry.
Yes.
And it was servicing just that local. If it's too much, then some part of the local government, because there were specific ones to specific markets. But right now, we have gotten to where it's no longer what it used to be. Technology has kaboomed that particular industry. The major advert you see across Nigeria, Money Point, is a microfinance bank. If you can keep calling the names, they are all microfinance banks. But right now, a lot of investment for them to be able to compete is going into heavy expansion. Now, what is left for the businesses?
Lapo.
Your sure loan facility.
That is what is left. Loan sharks. That's why loan sharks are everywhere. But I like the Federal Consumer Competition Protection Commission and all that, FCCPC. I like what they are doing. They are trying to clean that space. A lot of online influencers have come out to, make certain pronouncements regarding the Constitution and what these loans are and what they're supposed to do according to the law. But it's quite sad that microfinance is not what it used to be. Microfinance growing up back then, they had cooperative savings. They had so many things. My mom used to, in every of our sentence, it's always microfinance, because that was what, most of these business women and civil servants, that was what they were using. That was what, it was easily accessible because they don't just sit in their offices or have flashy cars and go into corporate rooms and all. They go into the market. They wear their polos, their t-shirt, jeans, and they go into the market and they market. They bring the financial institution to you, to your shop, to where you're selling, and they, advertise different packages, opportunities for you to expand your business. Back then, if you want to expand your business, they will first come, maybe a week inspection. They will check your shop, check the goods, the item. They will try as much as possible to value it, to see that, okay, this business is viable, and they will tell you. They would even go ahead and advise you that, okay, we can offer you this loan facility, you can do this, you can do this. They were actually feeding that particular sector, the micro SMEs. But now, like you said, with the whole digital system and every other thing, well, I still believe this year is still long. You know, a lot of agencies are trying as much as possible to bring sanity back into the system. So let's see how it goes.
Let's see how it goes. Now, just like he said, with the digital banking, he was trying to ask ourselves how micro as this microfinance banks. It used to be direct personal banking. The microfinance bank manager knew Hassan that was selling goat in the market. He knew Esther that was selling onions. He knew Mama Nkechi that had a provision shop. And the expansion and growth of this particular businesses were tied to the ability of the microfinance bank to be able to push funds out, to them. And they also going there to also take the funds back. So you had money to do your day-to-day transactions. Technology is supposed to make things easier, but at the same time, technology is bringing a separation between the banks and the people that really need this financial
Services.
money for scaling. Do you see a regulation coming in? Because we are having to see banks that are competing. The microfinance bank, as we speak right now, are competing with any other bank out there because they are more like fintechs right now.
Yes.
So do you see a form of regulation coming in anytime soon? Or do you see something that is going to happen?
So first of all, the growth of the microfinance banks can be linked to the CBN capitalization reform. That was what they aimed at. Right now, in those days, you could have a microfinance bank with a capital of 1 million, 3 million. You know, in fact, sometimes some of them were not documented. But right now, you're looking at CBN telling you that to have a microfinance bank tier 1, you need 200 million. If a state-owned microfinance bank, about, I think, 50 billion. Federal government-owned microfinance bank, about 100 billion. So your structure, your infrastructure, they have put them under pressure. In fact, the way it is right now, they are telling you that, look, microfinance banks are now struggling to balance resilience with profitability. So they are no more about that woman selling on the street. No, they are about the money. They need to make the money because they need to be capitalized. They need to sit down, be able to sit down with CBN. As of the end of 2024, or no, beginning of 2025, because of the new regulations of CBN, about 129 microfinance banks lost their license. So that's telling you that nobody is looking at how close you are to Mama Nkechi anymore. Everybody's looking at, do you have the money? Can you shut down? CBN also passed a rule that is reducing loan giving. So the microfinance banks are now on the edge. They now have to bring in risk management into it. So before they give out loans, in those days, you could walk into a microfinance bank and you say, oh, I want to sell here. Just show me small shop papers. And you are more likely to receive a loan. But nowadays, they are now into risk management. They assess you. They look at you if you are documented, if you can manage, if you are worth them giving that loan. Because CBN has put in measures that, look, loans, they are no more doing bad debts like that in microfinance. It's probably one out of 100 or 1 out of 500. Because they've also noticed that some microfinance bank, because of the lack of eyeballs by CBN, they were taking advantage of the system. Certain big names will go to microfinance banks and withdraw money, and they will never pay those loans back. So at the end, what it was meant for, to cushion the effect of poverty, or let's say the poor people, the market women out there, they now lost. Now, we are now looking at the new microfinance banks. This year alone, or last year, so 2024, microfinance banks invested heavily into online banking because they were digitalized. First Central Bank has even digitalized the process of their registrations. They are coming in. So you are now spending money. We saw microfinance banks partner with Microsoft, Oracle. This is a lot of money. We saw them also partner with Paystack. That's a lot of money. So there's a lot of investment that has gone into microfinance banks. Good thing now, they are more steady. Your money, you are rest assured that you can put your money in many microfinance banks and go to bed. Like you mentioned, I don't like to name names. That particular microfinance bank that is even struggling with the best 10 banks in Nigeria, they are going head to head when it comes to advertising, signing, monies, interest rates, and all that. But then the fear that we all have is, after all of this, like you said, are we losing the bank for the people, or is it that the people are growing? A school of thought have argued that, look, the common market woman is now online. So she's no more that woman that is looking for somebody to come to her. She's looking for safety in her measure, in her money. She knows that her money is safe. They will not just close and run away, which happened in our mother's generations. So it's a good one from the central bank. I think the microfinance bank growth in Nigeria is actually a good one for the banking sector.
Okay. First things first, the microfinance banks were established to grow SMEs. That's their primary call.
Yes.
They are not deposit banks.
Unfortunately, because of the rules, they have turned to that.
They still are not commercial deposit banks. Yes, they are meant to make profits. Yes. They are private entities. Yes, but their major call is to assist in getting small businesses funded to grow.
Yes.
So at what point are we losing that particular call of duty?
There's another factor that we need to also consider. Some of these microfinance bank staffs have helped people, relatives, to borrow money for which they did not pay back. I know of a case of a guy who helped a couple acquire a loan for them to expand their shop, which they did not pay back. He didn't know. Now he moved to another branch. He got arrested.
Okay.
Because the collateral that these couples put down, they wanted to sell it behind the microfinance bank. And so they got a hold of it and they picked up the guy because he was the one who actually used his name to borrow money. And not just from the microfinance, from other places. So, we've seen this happen. And of course, they have to bring in risk management. They have to do a whole lot of things. They have to be very careful because you cannot have an establishment where your own staffs are shortchanging you. It's not healthy for business. So those kind of things. And, I must say, I'm not trying to discredit or discourage anyone, but in Nigeria, part of what gave rise to these loan sharks is the ability of people paying back. People do not necessarily want to pay back. They find it hard. It's easy, it's sweet when you're being offered 10,000 naira to pay back in a week, 15,000 naira, 20,000. It looks juicy, it looks attractive, but can you actually pay it back?
That's always
we have
issue.
grown to the culture that I beg, I won't pay back. They can't come and arrest me. I mean, they will only send my pictures. Some have even gone to post people's obituaries. Just to defame them and all that. So all that, a lot of microfinance are looking at all these things. And, so that's why they assess you. They have to really assess you.
Yes.
They know the businesses that can thrive. They know the businesses that cannot thrive. So when you come up with a business idea to them and they know this business idea cannot thrive, it's harder to convince them that this business idea will thrive. Now, if you have an account with them, fat, juicy account with them, they might consider it that, okay, it has. So that's why cooperatives tend to borrow people money than you just being a walk-in customer. Cooperative, you have money there. There's a limit you must even have, maybe 500,000 for you to access certain loans. So because they know that, yes, your money is with them. If you like run away, they will get part of their money back.
Okay, now let's come back to the core issue that we are looking at. That's assets of microfinance bank. We'll see, thanks to expansion, to what's happening in the technology space now. We'll see a whole lot of microfinance bank also investing in assets. Originally, they should not be responsible in putting those infrastructure on. You go to some places and you see them investing in heavy infrastructure, like for power. For some particular banks, they are directly in line with owners of telecommunication facilities and are funding it. But this is supposed to be the core function of some either private organizations or the government. In one way or the other, knowing fully well that this money that they are spending is supposed to go to businesses to scale. Do you think government should start compensating them for any of them that get into this kind of venture?
Okay, and for compensation, government already has that with them, I think, because many times, if you actually notice, even as tough as when CBN increased their capitalization and all that, there were still soft loans for SMEs which most of the time they pass through microfinance banks than your regular banks. Most of the partnerships from, let's say, UN and all that, most of the budget goes through microfinance banks than the regular banks, so that SMEs, low budget, small scale businesses can easily reach out and get these businesses. But one thing microfinance banks have done is they have added advisory services to what they do now. So when you come in for a loan, they assess you, risk management, and they now advise you, because they realize that they were giving, what they did is literally they are learning from past mistakes, because a lot of microfinance banks had to close because of things like that. So they don't just give you loans, they advise you that, okay, if you want to do shoe, why don't you do shoe business and food by the side? I think that will make more money. Now, investing in bigger businesses is because of the capitalization. They are now under pressure to make profit. And the best way to make profit is not by the guy that is doing POS by the street. The best way to make profit is an establishment by Femi Walsh. There will always be money. There will always be money in manufacturing. There will always be money in telecoms. So indirectly, they are putting their major profit or their major might behind people that they are more sure of 100% returns than the regular risk hazard entrepreneur that they know that can go down. Now, the good thing is, with those fundings from there, they can easily waive off bad loans from smaller entrepreneurs whose shops get burned or who get robbed or something. So that's why they are still balancing out, and that's why central bank is insisting that, look, your capitalization base must be copious so that you can meet the needs of smaller business.
I think what they can
Yes.
do also is, this microfinance can also take a step further and partner with insurance companies. So as they are giving you the loan, you're also insuring that business. That way,
There's a balance.
there's a balance.
Yes.
But a lot of people don't believe in insurance. A lot of people don't insure their businesses.
Nigerians.
That's why they fold up from time to time. That's why some of these banks, when it gets, they are insured, so they just fold up, they get back their money, and they don't actually lose. But you, the actual businessman, if you do not insure your business, when the time comes, and you'll be left alone.
Let's look forward to better days.